Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business stories, their context, their relevance and policy impact. I'm Govindraj, Ethiraj. The Union Budget 2017 was a first in some ways. It raised a salute to the individual taxpayer, brought down tax rates for mid and small-sized companies and stepped up spending sharply on infrastructure and social sectors. But the budget was also presented in the context of weak demand, particularly due to the lag effect of demonetization, global uncertainty following Donald Trump's presidential policies, and finally, slow growth back home. So the question we are asking is, to what extent does the budget address the long-term issues that are facing the Indian economy and businesses, and more importantly, what else needs to be done? To discuss this, I'm joined by Banerjee, Managing Director of Caprihans India and a convener on tax at CII, and DK Joshi, Chief Economist of rating agency Crisil. Thank you both for joining me. Robin, let me begin with you. So, the question that I'm trying to first address is, what's the broad takeaway from the Union budget in the context of what's happening around us, both within India and outside?
First of all, what's the budget? Budget is a statement by the government, for any government, how they are going to plan their income and expenditure, receipts and payments for the following year. And what did the government do? The government did exactly that. In my view, there are loads of things which a budget says, but let's take away two stuff. One in the receipt side, another is the payment side. In the receipt side, what the government has done, they have taken and hitched his hike on the demonetization. The demonetization has given loads of information as far as they are concerned as to what and how to tap people who are not paying taxes. And that information base the government is going to use. And as regards the utilization is concerned, the government has gone and in a big way in utilizing money, which is about 310,000 crores on infrastructure. I will spend a minute on this receipt side of the story, and then I'll spend a minute on the expenditure side of the story. In the receipt side of the story, the government in the budget itself said that so many people doesn't pay tax, too many people are quite rich. But let's take one figure which caught my attention. There are 1.5 lakh people who have deposited money in the bank account between 8th November and 31st December of 3.3 crores per head.
Average, yes.
Average.
Yeah.
Of course, they deposited 80 lakh crore. So 1.5 lakh people deposited 3.3 crore per head on an average. However, there are 1.7 lakh people or assessees who files income tax saying my income is more than 50 lakhs. How is it possible that this is a complete dichotomy between 1.7 lakh people depositing 3.5 crores cash, but only 1.5 lakh people again saying that I have only 50 lakhs income. This knowledge base, this information, the fact that the government has brought it above the table and trying to make use of, to my mind, is going to broaden the tax base. As regards utilization is concerned, they are going big way in making lots of investment. In agriculture, they're saying credit will be 10 lakh crore, and of course, infrastructure is
agriculture, rural, farmer, infrastructure.
And that expenditure is going to help everyone, including manufacturing and service sector, which people are saying have not been addressed.
So I'm going to ask you about industry and maybe as a company, what do you feel? But let me get DK in here. DK, if the Economist view, when you look at the numbers, you look at the left side and the right side of the country balance sheet, how is it looking after the budget?
Well, overall, I think, as you said earlier, I think the economy was on a weaker wicket because private consumption that was holding on till 2015-16 materially slowed down in 2016-17. I think even the CSO estimates show that the private demand has slowed down. Capacity utilization has been coming down each year. I mean, it is yet to pick up. So I think in this scenario, there was need to create demand in the system, consumption demand, so to say. But the budget chose the fiscal consolidation path, which clearly says that they are not looking at the immediate gains. I mean, the benefits of fiscal consolidation come over a period of time. So clearly, government has continued its policy of fiscal rectitude. They are focused on ensuring that the public finances are sustainable. So that's one part of the story. Now, within limited fiscal space that they had, I think they have in some of the choices are quite wise. For instance, the spending on road and low cost or affordable housing, I think is a good choice because not only you need to push demand up, consumption demand up, but also create employment. So and these segments are very, very labor intensive. The construction activity in India is generally very labor intensive. So it will create quite a few jobs depending on how efficiently these programs are implemented. And once that happens, these people also have high propensity to consume, and about a quarter of their spending goes into discretionary spend. So I think in a way, creating jobs, giving a mild boost to consumption in the process, and also creating assets. I think this is something that I would put under good economics and good politics as well. So that's one part. So fiscal rectitude, spending the money wisely. The other thing that I want to highlight is, I think, which was quite notable. I mean, what we've been observing is that the capex in the last couple of years, particularly from the government side, has been falling. And this time around, I think there seems to be a turnaround. So the spending mix of the government in terms of whether it is fueling revenue expenditure or capex, I think that's becoming more favorable. So I think there are, so this kind of policy will benefit over the medium run, I would say, because you're not putting economy on steroids. In the short run, the positive spillover of fiscal rectitude is that RBI will now be motivated to cut interest rates because they're following an inflation targeting framework, and within that, I think the coordination between monetary and fiscal policy becomes extremely important. So now the signal from the central government is of fiscal consolidation, and that will be taken positively by RBI. And I believe that there's a big chance of a rate cut happening in the next policy within a couple of days.
And I'm sure many people would like you for saying that. I'll come back to you in a moment and ask you about what perhaps was not done, at least when you look at some of the expectations. So, Robin, what's yours as a company? Many companies I've been talking to, for instance, were not very happy with the fact that there's nothing really to spur investment. And investment is obviously a precursor to jobs, isn't a precursor to economic growth and demand growth and so on. What's your sense?
I think there is a lot in this budget. The government is going gung-ho on expenditure infrastructure. And the government is going gung-ho on extending credit to the rural and agri sector.
Right. And my question is private. I mean, yes, the government part, I think, is good.
I will come to that. The fact that the government is going to spend, because the budget is a government exercise. It is not a private sector exercise. If the government is going to spend all that money, they're going to need things to produce those things. If they have to produce a school or a college or
or roads, for that matter, you need
they need a private sector to spend. In agriculture, if they're going to spend, they are going to buy a toothpaste and a shampoo and whatever a soap. So this is going to have a kick-in effect on the manufacturing and service sector, no doubt. But the question here is, the government must spend logically and correctly the amounts which they have presented yesterday to all of us.
Right. Okay. So, DK, do you feel that the public expenditure will in some ways make up for what may or may not have come or should have been done in the area or space of private expenditure?
Well, I think the issue, if you look at the official statistics on investment, I think investment to GDP ratio has now been falling for almost 5 years. The reason there is, it's not the public investment. Government is still investing in wherever it has the scope to invest. But the private corporate sector, I think, is shying away from investment. And the reason, as I said earlier, the capacity utilization is falling. Some of the companies are straddled with high leverage. So in this scenario, private investment, which is an engine of sustainable growth, I think will take a little more time to fire, unless the capacity utilization reaches the threshold that trigger private investment, which it is not there right now. I think the private investment will take time to recover. And this government also realizes, I mean, it's not that they don't realize, but there's little you can do. I think the only way to create an excess demand would have been to follow imprudent fiscal policy, which is raise the fiscal deficit. And I think that would have created temporary spurt in growth, which we saw in 2010, 2011. That did not last. I mean, you had to pull back your fiscal stimulus, you had to pull back your monetary stimulus because it created inflation. It also led to unsustainable public finances. So the good part here is that government is on the path of fiscal consolidation, and the downside of that is that you will not see immediate pick up in growth. So it's not pushing the economic cycle up, but it's going to raise the growth potential. I think, as was mentioned earlier, I think I do see a lot of scope in raising the tax compliance. And if you look at the tax to GDP ratio of the government, the peak that we got was in 2007-8 at 11.9. We are still below the peak, but at least now the direction is moving up. I mean, even for this year, the tax to GDP ratio is at about 11.3, which is quite aggressive. And I think they'll have to leverage on big data. They'll have to leverage on the
Hold your thought there for a second, Robin. Let me quickly come back to you. So, as a company, and what's your outlook for the economy in general and in specific? And to what extent does this budget document, not that the budget has to respond to everything, incorporate or account for the things that are going to happen or likely to happen, not just within the country but outside as well?
This budget, to my mind, addresses and divides the economy into two parts, the organized sector and the unorganized sector. The moment the demonetization took place, the organized sector was pepped up and the unorganized sector was brought down. This has been given a fillip in this budget in their policy decision making. So CII, for which I belong to, and the organization which I belong to, are the organized sector. So obviously it is a good fillip for the organized sector. Now what will happen is there is going to be demand shift from the unorganized sector to the organized sector. The quantum of toothpaste and the shampoos and clothes and soaps which we were using or the clothes which we were wearing will continue. Our demand will continue uninhibited. However, something which we were perhaps sourcing it from the unorganized sector, I shall source it from the organized sector. So on an overall basis, the organized sector, which actually pays tax and is accountable, which is your question, is the economy getting accounted for now, will get the right fillip, and that to my mind.
And the organized sector itself will expand because you're pushing more people into the...
Absolutely, because unorganized will shift to organized sector willy-nilly.
Right. So that's the domestic part. Can I get a quick line about the overall outlook, global, whether trade, what could affect you?
Yes. The world is now in a black box. Mr. Trump has added to the black box city, if I may say so. Of course, Brexit was there. So the industrial sector does not know what's going to happen to the US, which is the bulk of the demand which takes place from India. However, given what it is, if you see of late, the exports in the country have been growing. In terms of tonnage, in terms of number, may not be in terms of rupees crores. So things, in my view, are looking up. Exports, to my mind, does not grow just because the rupee is depreciating. Exports grows when you become more cost competitive. And moment the organized sector becomes more cost competitive and unorganized sector, to my mind, gets affected, India's export willy-nilly will become more competitive in the global arena.
Right. So you're saying things are looking good on that front, and of course on the domestic front, for the reasons you pointed out, on the expenditure and receipts, things are looking good too. We've run out of time, unfortunately, Robin. Thank you, DK and Robin, for joining me. We need to go in for a break now, but coming up on the other side, how did Budget 2017 exactly affect your pocket? Sumit, Lunker and Uday join us. Welcome back to Policy Watch. The Union Budget presented by Finance Minister Arun Jaitley for the first time reduced tax rates for those earning between 2.5 and 5 lakh rupees from 10 to 5%. On the other hand, there is now a 10% surcharge payable by individuals whose annual taxable income is between 50 lakh to 1 crore rupees. While for small and medium businesses, the tax rate has been brought down from 30 to 25%. On the indirect tax side, there were no announcements, contrary to expectations of a service tax hike to align with the new goods and service tax slated for a July 1st launch. The question we are asking is, how do all these measures add up? What will be the impact on your pocket and what will be the ultimate benefit, if any, right away as well as in coming months? To discuss this, I am joined by Sumit Lunker, partner at PwC, and Uday, tax expert and former partner at KPMG. Thank you both for joining me. So, Sumit, I'm going to come to you because there's not so much to talk about indirect taxes except for the GST alignment. Uday, let me begin with you. What's the impact on individuals going to be?
So, I think as you briefly just mentioned, as far as individuals are concerned, a common man or a person earning income of 5 lakhs, that's 40,000 rupees a month, those will get tax benefit. Essentially, at a 5 lakh, you used to pay a tax of 25,000 rupees, considering the first 2.5 lakh exam. So, it was a 5% effective tax rate. It's now been given a 50% rebate. So, you are essentially paying 2.5% tax, 12,500. That I think is a very welcome relief.
So, 12,500 is your benefit.
That applies to everyone. It applies to income up to 5 lakhs and income beyond even 5 lakhs. But at 5 lakh, that translates into a 50% tax rebate. So I think that's a welcome change. As far as, and that the finance minister said that the total loss on account of this 5% rebate is close to 15,500 crores. This is based on the people who have filed the tax return. So there are a lot of people who may be even outside the tax net, but concerning who have filed the return. What is tried to balance this by levying this tax on the rich people. And
so super rich was earlier 1 crore plus, now it's 50 lakhs essentially.
Yeah, so maybe that bar has been reduced, and between 50 and 100, that is 100 lakhs, the surcharge of 10% has been brought in. And if you look at that, only a surcharge at 30, it becomes 33, but you also have a cess of 3%. So effectively it results into 33.99 or 34% tax rate. So 4% effective tax rate increase between 50 lakhs to a crore. On a 50 lakh, on a 4%, it will pay additional 2 lakhs as extra tax. And on above 1 crore, there was a surcharge of 15%, which continues. So that becomes, I think, 35.5 or something.
Right. So you're saying 12,240, is that the figure? 12,000, how much is the saving that an individual can have post this budget?
12,500.
12,500. Okay. So let's talk about indirect. So one of the big expectations was that the finance minister will start aligning rates with GST, which is going to be introduced on July 1st, as announced. But that he did not do. So one is, why did he not do that, and what did he actually do?
So no big bang changes as far as indirect taxes are concerned. One thing is that the finance minister mentioned very clearly that he wants to implement GST as soon as possible. I would also say that there is a hidden message over here. He has not spoken about the date, which last time he spoke in the council, after the council meeting, as 1st July. But now what has he done? The excise notifications that have been issued, all will expire on 30th June. That's a clear indication that he wants to go for 1st July as the date, while he has not spoken about it. Coming to the service tax rate, the industry widely expected that there will be increase in the rate to maybe 17 or 18% to align with the services rate in GST. But the good thing he has done is not changed anything. Same is for excise and for customs also, in terms of the basic customs duty. But why is he not done? Probably, the window is only of a quarter, and he does not want, people to go through the hassle of changing their systems and all those things. So it makes sense. Now coming back to what are the changes that he has, proposed. One of the two or three important changes that he has proposed is he has abolished R&D cess. He is proposed to abolish R&D cess from 1st of April. Now that's a very big relief. You don't get credit of R&D cess. It's a cost, and that's 5%. Now that is promoting Make in India. You are actually inviting foreign investors, come to India, make in India, transfer your technology, don't unnecessarily take this cost of 5%. So that's a very good welcome measure for the industry.
So which means that if I were to spend, let's say, 100 rupees every year on R&D, so what is the benefit that I got earlier and what will it become now?
So if there is a transfer of technology from outside India and I'm paying a R&D of 5 rupees on this 100 rupees, today this 5 rupees is not a cost to me. So completely it's a benefit to the directly hitting the P&L in terms of profitability.
Right. So entire 100 rupees goes into what I wanted to do in terms of R&D.
Correct,
okay.
Correct, absolutely. In addition to that, one important big thing he's done is that he has reduced the basic customs duty on LNG from 5% to 2.5%. Now our economy wants to move towards a gas economy because gas economy, which is natural gas economy, is like a natural bridge between the fossil fuel economy and the future economy of renewable energy. So that's the bridge, and that is what the government wants to focus. The energy mix of India is only 8% as far as natural gas is concerned, and the oil mix is around 25%. So we need to move towards that. LNG is also a very important raw material for the industry. So I think they are promoting that.
And you have automobiles also running on LNG, right?
So I think that's where they are coming from. They have reduced from 5 to 2.5% to encourage, giving impetus to the product manufacturing sector.
Right. Okay. So let me come back to direct taxes. So the other significant move was a reduction in taxes for small and medium enterprises. The finance minister said 96% of companies really come there. So and what is how does this quantify, and what is the impact likely to be in terms of sheer actual benefit?
Okay. So first of all, this change applies only to a company SSE. If the taxpayer is a company, contrary to the belief that people may have it applies to all businesses with turnover up to 50 crores. Answer to that is no. It applies only to a company, which I think is.
So what does that mean? That someone
it means if you are a company if you are a private limited company
Yeah.
or a public company, and if your turnover is less than 50 crores, then the tax rate gets reduced from 30 to 25.
Yeah.
However, the same business, if you are carrying it through a partnership or an LLP structure,
Right. Okay. So you're saying
or
only
a
private
proprietor,
limited companies
only
will be.
only
Yeah.
companies will be allowed
Right.
the tax rate rebate, which I think is strange because the whole purpose should be to give to small businesses rather than the entity
But
structure.
could that be because maybe there is higher level of transparency potentially in a private limited structure?
Possible. I think that may be the case. But LLP as a structure is emerging a lot in last few years, and I think LLP would have been at least one or a partnership firm which should have been given a reduction. 30 anyway is going to become 25 in 2019. So this particular company entity gets that benefit 2 years earlier. What it means is, as Finance Minister put in, as per the companies registered, there are some 6.96 lakhs, close to 7 lakh companies registered. And when the analysis was done, almost 6.76 lakh of companies, number of companies will benefit. It means 96% of the companies have a turnover of 50 lakhs or below. So I think
50 crores, yeah.
substantial chunk of the companies again registered, and then whoever turnover of 50 crores or below. For the purpose of 50 crore, the limit has to be seen as in the previous year, which is 2015-16.
Right.
Based on that. So this year your limit may be a little higher, doesn't matter.
Right.
16.
So in your estimation, you work with a lot of small enterprises. Do you see a lot of them actually benefiting? Are they already profitable and therefore potential beneficiaries?
Yeah, certainly. I think this is going to become a major benefit to SME sector. 5% rebate means a lot. So 30 effectively.
So there are a lot of companies who actually come into that
Yes,
bracket, who
absolutely,
are profitable.
absolutely coming. 50 crores is a pretty decent turnover today. 4 crores a month is not a small turnover. So.
Right. On the other side, obviously, the bigger companies have been left out of this. Right?
Yes,
They too were expecting. Actually, the
Yes.
wider expectation was that they would get benefits,
Yes.
but they did not.
Yes. So wider companies, the expectation was because the finance minister has given a path in the February of 2015, said that he will reduce the corporate tax rate from 30 to 25 over a 4-year period, and he specifically said the first year will be left out. So the 1 year is gone. So this year the expectation was that it will become maybe 2% down. At least 28% was the expectation. So that has not come, and that has come as a disappointment. Anyways, for the path, he has to reduce the tax rate to 25. So next 2 years, maybe he will have to do it.
And is there any other significant fine print in what you've read in from the budget in pertaining to direct tax for either individuals or companies?
So one change, which is I think in the fine print, is in connection with the individuals, in connection with the house property income. So today, if you have a house of your own, it is taxable as a income from a house property, and the annual value is 0. Against that, number of people would have borrowed the money, and on that you pay the interest. So that interest is given as a deduction up to 2 lakh of rupees. That continues. There are a number of cases where you would have bought the property under construction, and what law says is that once the possession is given, post that interest will be allowed as a 5-year period. So that also goes as an interest deduction. Third, which is the rental income. Number of people might have property who might have rented it. You receive rental income. Against that, if you pay any interest, currently as it stands today, before this budget, there is no restriction. So number of people might have an annual income from property, be it self-occupied or a rented property. Against that, the interest outgo is quite high, and that results into a loss, which is allowed as a deduction against either a business income or a salary income. So even a salaried class people get that benefit. Now suddenly you see a fine print section 71 of the Income Tax Act, which says that if there is a set-off of, there is a loss under the head income from house property, it will be restricted up to total 2 lakhs put together. Okay.
So in effect, I mean, it's essentially saying is that if you own too much property, then you better pay more tax, or you shouldn't be taking more.
I understand, maybe that is one part. Second thing is, this should have been introduced for the loans which have been taken from April 1. Because if I and you and somebody took a loan, took it based on the premise that this interest will be given as reduction. But leave aside still rented property, self-occupied property, that interest was always given as a deduction. So that interest outflow will, and now restrict into 2 lakhs. Of course, it doesn't lapse. It says it will be carried forward, but maybe it means nothing beyond a point.
So one interesting fine point.
Yes.
Anything you've picked up on the fine print, Sumit?
So on the fine print, what I could relate to some direct tax changes, and Uday can actually explain that more in detail, was, there is something called thinning of capitalization. At the same time, if there is any adjustment being made in the assessment, TP assessments, then you need to go back and make those changes in the books of accounts.
Yes.
I was, talking to my some direct tax colleagues. Now, if that is the case, you also need to go back and look at whether there is an additional customs duty or a reduction in customs duty liability arising because of book adjustments. Till now, you were not forced to do book adjustments if there is a TP adjustment. But if that's going to happen, is there any increase in indirect tax liability on account of that?
TP is transfer price.
TP is transfer price.
Yeah.
So you need to go back and look at whether there is an additional customs duty or a service tax liability around that.
Okay.
So that's very important thing when you kind of look at some
Right.
important direct tax
Okay,
changes.
so that's and it's something I guess more companies will have to look out for. Anything that would affect an individual or an individual.
As an individual, there is one small amendment exemption for students. So courses from IIMs, there has been exemption for non-residential also courses also. So there is one such exemption over there. Otherwise, we don't see any major
So all the
impacting the consumers.
all the firepower
at
is being reserved and preserved for
the second
GST.
session of the budget.
Yeah.
So once February 18th is the most important council meeting where we are expecting that the law will be finalized. Once that is done, what we see as a roadmap,
Right.
In the second week of March when the parliament sets in again,
Right.
they may take up the law and pass that law. Between March and April, you see that the state legislature actually passes the law. Then you finalize the rules between that time, finalize the rates between that time. The HSN codes have already been released by the GST, by the government. It's already been released. So people have started looking at classification and other issues.
Right.
So that's the roadmap towards the 1st July date, what I can see.
Right, and I'm sure we're going to be discussing a lot more about that in coming days. We've run out of time. Thank you both for joining me. That's all we have time for on Policy Watch, a budget special this week. We'll be back next week, same time. Thanks for watching.